It's such a great pleasure to have you here in this webinars with our special topic this afternoon, the beginner's guide to creating a strategy. Ladies and gentlemen, the webinar is open. The chat is open. You can type whatever you are interested on, whatever drives you on, or what moves you in your brain, in your mind. Let me know. It's your webinar. It's just for you. Today we are going to be talking about creating a strategy, and I want to say, please make sure that you stay online till the end of this webinar, because at the end of this webinar I want to show you how we can translate it in real charts. And the end of this webinar, first we want to talk about the theory, and at the end of the webinar we want to talk about the practice. So make sure that you stay in this webinar till the end. In this webinar series, Trading Spotlight, I'm partnering with Admiral Markets, which is a Forex and CFD broker that offers trading in over 8,000 different financial instruments through one of the world's best trading platforms, MetaTrader 5, and of course 4 as well. Finally, if you're watching this on YouTube a little bit later, remember, please like this video, share it with other traders, and subscribe so you never miss an episode for the next one. So first of all, thank you guys, wherever you are around the world, you're looking with this, you're watching this video. I'm really honored to have you here in this webinar. Let's start. This is one of the topics, the beginner's guide to creating a strategy. So what's on our agenda this day in the next 45 minutes roundabout? Why are trading strategies so important? Do we need a strategy, or can we trade by accident? Of course, let's talk about that. Do they need really complicated, or should we take another system? A really easy strategy I want to introduce to you in this webinar, and at the end, that's the reason why you have to make sure that you stay till the end of this webinar. You want to see some trading examples. Good day, Robert. Greetings from down under. Greetings here from Lower Bavaria in Germany. It's great pleasure to have you here. Of course, all the other ones again around the world. So guys, that's me. I'm important in that point. You are the important guy here in this webinar, because I want to teach you, I want to give you some advices how you can become successful in trading. And of course, I'm just a coach, and I can show you the way, and I can open the door for you. And I would carry you if I could, but I couldn't, because you have to go by yourself, guys. Just I want to give you some inspiration, and I want to inspire you that you have maybe a little bit different view at the markets. Okay, so that's gone. That's my wonderful team of Admiral Markets, wonderful guys and girls they are working with. I can say, I would say a secret, that's the best team ever I worked with in my whole trading career, the best team of Admiral Markets. So why are trading strategies important? Let's talk about this interesting and great stuff. Trading, guys, ladies and gentlemen, is a job. And in every job, you have rules and strategies. I guess you have a job wherever you are around the world. I hope so. So, and if you think about your own job, you go in the morning to your job, you make your job, you follow your rules, and you have the strategy you do. You exactly know when you have what to do, and exactly you know what you will earn at the end of the month, unless you have your own business. Then, like me, that is a bit different. But in a normal job, if you're an employee, you know what you have to do every day. You follow strategies your boss or your manager sets to you, and you follow these strategies. This is your thinking. This is the kind of education, life education. In that way, our life works. That's the education of our parents, of our teachers in school, of our managers in our education, and in job as well. So in that way, we are educated. We make our job, we follow the rules, we follow the strategies, and we know the result before. And most of the times, you know exactly what you earn at the end of the month. And then you come to trading. And most of traders think they can do it there differently. They can follow anything or anything else. Because trading is based on probabilities. And therefore you need a strategy that can be proven with statistics. And if you read a newspaper, that's not a proven statistic, guys. And if you follow some guys in the internet or in such communities or something else, someone is crying long, the other one is crying short. The only one says follow this EA, the other says follow this one, and the next this one. So too many opinions, but so less rules. And that's the point. That's the point, guys, that you need for trading rules and a strategy. Only this kind of trading with a strategy brings calm in your trading, bring you in the position of comfortable feeling. And this is so much important, because if you are excited in trading, guys, if you are excited, you're very close to making mistakes. You're very close to making actionism. And actionism leads to next mistakes. And that's the point why you need always these strategies. What kind of strategies is in that point not important. You need your own strategy, but every strategy should be proven with statistics. So maybe whatever you use, make sure that you have proven statistic systems and strategies. And please change your view, guys. Find your real why. This is so much important. Find your real why. Money, guys, is not the real why. We come to trading cause money, that's right. But experienced traders stay about the insights. And what are the insights of trading, of real trading? That's the position, that's the point. Find your real why. What is your real why? What do you want to do with trading? What do you want to reach with trading? Okay, money is one point, but money is at the end, like in every kind of business, a waste product. You have to focus on your business. You have to focus on your goals. You have to focus on your real why, on your real job. And if you focus on these positive things, money is not positive. Money is only a question at the end, just only it's a purpose of what you can do with it. So, but money is a waste product. It comes, it falls down on your way to success. And you will be successful in trading if you follow rules and if you have a strategy. It's the same thing in every kind of business, not only trading. If you want to build up another business, you need a strategy. You cannot do something about an accident. Oh, today I will do this one, tomorrow I will do this one, and over tomorrow I do another thing. With that kind of thinking, you cannot build up a business. And in trading as well, the same thing. You cannot build up a business, and not a trading business as well, not at all, without a strategy. And I want to introduce you in this webinar, in this next minutes, to a very easy trading strategy, a really easy strategy at itself. You know, the big challenge is taking place in your minds. For that, you need a community coming soon. I have a wonderful team behind me with Admiral Markets, and we build on a great, great community. Be patient. Coming soon. We want to help you with this Trading Spotlight webinar series, but we want to help you if we are finished with these webinars, that you have a contact person after the webinars so we can trade together. Coming soon. Stay at Admiral Markets, stay with us. We will surprise you very, very soon. So come on to the next one. The KISS principle, guys. The KISS principle says, keep it simple, stupid. Why? Ladies and gentlemen, trading is not a rocket science. You don't need a mathematics grade for that. You don't need a special education for that. You don't need it. Trading is really, really simple. The bigger challenge, or the big challenge, is not trading at itself. It's taking place in your mind, because you cannot follow the same rules in life like in trading or as in trading. That not, because in life you have your guarantees. In your job, as I said, in your job you have your rules, you have your strategy, and then you know you have a guarantee. If you work with a great company, of course, you have your guarantee that you earn your money exactly, you know, at the penny, punctually at the penny, the end of the month. But in trading, you need rules and strategy as well. Exactly the same point. But then comes the big difference. In trading, you cannot know what you will earn with your trades. Not at all, nothing else, not at all. You will get a completely other result with every trade, with every single trade. And you cannot know what you will earn. And that's the big difference. That's the big difference, because you work in trading with probabilities. In life, in your normal life, you can trade with guarantee. You can work in life with guarantees, but not in trading. In trading, you only work with probabilities. And that, guys, is the big challenge. Therefore, you must have a keep it simple, stupid system, because the most focus is on personal growth, on personal development, to change your mind, to fix your mindset for trading. The market won't fix itself for you or for me. You and me, we have to fix and to change our mindset that it fits to the market, not in the opposite direction. Never. It's our job. It's our job to fix our change, our mindset, that it fits, that we can become successful in trading. For that, we need a really easy system. Strategy, as I said, isn't the biggest challenge. You can read it in the slide here. So having a strong strategy leads to fewer emotions, for example, fear or greed, when you trade. What does it mean? If you have rules, if you can follow every trade in every day, in every hour, in every month and week, you know what you have to do. Think about your normal job. Think about it. Lay back a little bit and think about your job. Are you exciting every day, every morning about your job? If you do it a little bit longer, of course, I guess not. If you have experience in your trading, you are no more excited in the morning when you go to your job, because you know what you have to do every day. There's no reason to be excited every day. Oh, what I have to do today. Oh, what will happen today? No, that's not. And this attitude you need for your trading, with the knowledge that you work with probabilities. Always think about this big difference, you know, between life and trading. So, and having a strong strategy, and you trust your strategy, you trust and you believe your rules, then you have fewer emotions. You don't have to be fear about trading, and greed as well. So, and only if you have less emotions, then you are not in danger to break your rules and to make big mistakes or follow other things. So this is the point why you need a strong strategy. So, like I said, think of trading as a job. I guess you don't have any fear in your job. Why? There's no reason for that. So the message of this slide is keep it simple and stupid. And I hope, you can make a screenshot, you can repeat this webinar in YouTube, and I hope you like it there. Give us a like there for Admiral Markets, that we can have evergreens there. And or maybe you make it different. Take a pen and a paper and write it down, what you learn here. Why? Don't forget your consciousness. Don't forget how your brain, how your mind is working. If you see something and if you hear something, it's one thing. But that's one way. It's a one-way ticket. But if you see and hear something, and you do some actions with your pen and write it down, the important things, you see it a second time. And this is the point. If you write it down with your own hands, with your own fingers, what you hear and see, write it down, you do some actions, that's good for your mind, and you see it a second time. And then it will be stronger in your consciousness. Don't forget that. Only your point. Just an advice about psychology topics. Okay, let's go on. The simplest strategy ever are the 6 tenets of the Dow theory in modern age. Maybe you know this guy. This is Mr. Charles Dow. He published his 6 tenets in the year 1873 in the 19th century. So, and this is one of the easiest and simplest strategies ever. Let's talk about the 6 tenets in this webinar, guys. Rule number 1, or tenet number 1, is the averages or the charts discount everything. So everything that supply and demand influences you can see in the chart. You don't necessarily need fundamental analysis. Oh, I know, this is really revolutionary. I know, I have a lot of clients and know a lot of guys, they see, I need fundamental analysis. I know this is really revolutionary. But come on, let me explain you this point. This is really interesting. Imagine you are depending on fundamental analysis. What you have to do, you have to study numbers of the interest rates. You have to study, if you want to buy a share, you have to study the numbers of the company. You have to visit the main meeting of the company. You have to talk to the CEO or the secretary of the CEO, or you have to spend a lot of times with the company that you know what they have in the pipeline for the futures, what the kind of products they have. So if you have as much as possible information that you know, is it worth to buy this share? Or you are a Forex trader, okay, you can spend a lot of time with reading numbers and the reports of the interest rate of the Federal Reserve and so on. It's okay. You can spend a lot of time with all that stuff. But at that point is if you have all your information on your table, what you have to do at the end. At the end, you have to open your broker mask. You have to open your order mask. You have to type in your entry, your target, and your stop. And then push the button. And now guess, where can I see it without I did or I do the same work like you? Where can I see it? In the chart. Maybe you work with a big amount. Because most of the guys, they are working with fundamental analysis, they have huge accounts. They don't work in 1 minute or 5 minute charts. Therefore, I look at the daily chart or the weekly chart. Where can I see it? At the end, I can see it in the chart. Because even the fundamental traders must put their orders in the bookmap. So that's the tenet number one. Everything that supply and demand influences, arbitrage, hedge, fundamental, normal trading, you can see in the chart. That's the reason why I don't spend too much time with fundamental analysis, because at the end, everything you can see in the chart. And in the end, Vincenzo wrote it here, it's how we use that information that makes a difference. Absolutely. At the end of this webinar, you can see, oh, that's fine, well, nice, entertainment, Marcus is cool, wonderful, funny. But where is your benefit if you don't transfer it in your trades? That's the point why I said, write it down for yourself. That makes a difference. So remember, number one, and if you ask me if I use fundamental analysis, not really. I look sometimes. I have a look at the cotton data at the weekend, so I can see where are the really huge traders are positioned. That's the only one I am looking for. Otherwise, on the other side, I only am trend trader. But that's the other point. Number two, guys. Number two. The market has three trends. Tenet number two. They are the major trends, that's the long term. The medium trends, that's my preferred trends, medium trend. And the small trends, very high volatile, and really they don't run too long at the most of the times. And that trend is defined by higher highs, that's I guess well known, and higher lows, and a downtrend is defined by lower lows and lower highs. I think this is really easy. In every chart, guys, in every market and in every chart, you can see three trends. 1 minute, 5 minute, 50 minutes, hourly chart, daily chart. In every kind of chart and in every time frame, you can see your three charts. Major, medium, small. That's the second template, that's the second tenet of Charles Dow. So the third one is major trends, or to be honest, every trends have three phases. The accumulation phase, the market rebounds after a correction, and experienced traders decide to buy or to sell in a short, of course. That's the best phase, guys. Let me tell you this. That's the best phase, in the accumulation phase. When all the most guys are selling or buying in panic, if the market is in the correction, they miss the understanding of how the market will work. And they are sell their positions or close the position in panic. But don't forget, trading is a market. If you sell your position, you have another guy on the other side who wants to buy your position, your lot, your chart, your contract, or your share. That's the accumulation phase. Experienced traders only open positions in the correction phase, in the accumulation phase. The phase of progression is afterwards. The market starts the next move, and a lot of traders jump into the market because they see, oh, the correction is finished, the movement is start, I want to be a part of it. But this is before we reach the last high, or in a short trend, the last low. This is the progression phase. The distribution phase is when the market is very, very strong, and you can read it in newspapers, in internet, or you can see it in a chart, and everybody wants to be a part of the next run. This is, I remember me in the start of my career. I always bought on the weekends the Euro on Sunday. It's a German paper, newspaper. and I bought it every week, and I wrote the numbers or the row of the topics of the best, the movers, the best movers and the worst movers of shares. And I thought, oh, this share made 10% the last week, I have to buy it. Or 8% or something else. So, but I've forgotten that this share is in the distribution phase. It's already in the move. Stupid to buy or to sell in the move. Really, really stupid. Reminds me on the new economy bubble of 2000. Oh my God! Yes, Vincenzo, you know this time, a new economy bubble. Oh my God, I lost almost all my money because at that time, in the year 2000, you could buy everything, every shit stuff you could buy, and you was a winner with that. But most of the people like me lost everything about that because I was too late in this bubble. I went into this bubble when it very close to burst. That was a great experience. Oh my God, I don't want to repeat it again. So, but this is the distribution phase, and maybe we had the same thing very close, very close in the past. You know Bitcoin, you know, very less were in when the Bitcoin has a worth or value of $2,000. I wrote so many things in internet and Facebook when the price was at 16, 17, 18, 19,000. Then everything, Bloomberg, NTV, everything was full of Bitcoin, and you could read in Facebook, buy Bitcoin. Yes, a couple of weeks ago, a couple of weeks later, no one was talking about Bitcoin because it sharply decreased and sharply drops down to kind of no clue where is it right now. But that was the next bubble, distribution phase. That's the point. So that was the three tenets, the three phases of every kind of trend. The trends must confirm each other. If you want to trade in the hourly chart, the daily chart must confirm the hourly chart, and the leading trend in the higher time frame must support you. This is in the modern age. In the early age, Charles Dow said let me see, the industrial Dow Jones must buy support by the transportation index. They must confirm to each other. Today, in modern age, we say the big picture should or must support you. And if you make trades in hourly chart, make sure that the daily chart is supporting you, like by a known trend or by a support resist or by a divergence, something else. You know, we do it every day in our live trading. So tenet number 5, the volume must increase in direction of the leading trend. This is very important about if you are a volume trader like in futures or in shares, not in Forex market. In Forex market, you cannot see the volume because it's an unofficial volume about the liquidity pools, but we have there our market profile. It's almost the same. But if you want to trade in futures, communities or metals or something else, or in shares, you have to make sure that the volume is increasing in the direction of the leading trend. This is tenet number 5. Tenet number 6, a trend is assumed to be in effect until it gives definite signals that it has reversed. So Dow thus describes the inertia of the trends on the basis of physics. That's the point. So a continuation of anything is always more likely. So you can see me in the picture. I'm not really. Yes, my weight is not too less. Let me say it that way. So in my very private free time, I'm a referee in football, in soccer, German soccer, at the weekend. And you know, I'm a really heavy guy. So, but if I'm in the run, I need a couple of times if I can stop. So it's like not a speedboat. I'm like a Titanic. I need my time to stop and to move. So if you are a small guy, so like my colleague from Admiral, I guess you can run and stop and move, not me. So this is like the description of the basics of physics. Yes, so and it's a trend. So a trend continuation is more likely than a trend break. As a rule, the probability is that the existing or the leading trend will continue. This is tenet number 6. Okay, guys, that was the 6 tenets of Charles Dow, and therefore we have, based on that, we have a really easy system. And this is based on that. This is the simple DowHow strategy. DowHow, ladies and gentlemen, is not a Chinese food. It's based on the 2 terms, the right know-how about the Dow theory. And I was the founder with a friend of mine. We founded this term here on the DowHow strategy. And look at the chat, please. My colleague sent you a link to our YouTube channel. Please don't miss any future videos. And we would be really grateful if you share it and like it, so we can extend this trading spotlights webinars. So this is our simple, really simple DowHow strategy. The probability is almost 72%, between 64 and 72%, depending if you all care about the big picture or not. Without the big picture, you have a probability of 65%, and with the support from the bigger picture, you have 72%. So, and what did I say? Where we want to go in a trade? We always say 3 phases: accumulation phase. If we have a valid trend, if we are in the correction, whether in the long or in the short trade, then we open the position. In a valid trend, in the correction, in the accumulation phase. Therefore, we can see it if we can see the price is make a rebound or is recovering, then we can open a trend. Therefore, I use for my own trading Heikin Ashi. There are 2 candles, only 2 candles, not like in Japanese. As Japanese candles, you have a lot of patterns. In Heikin Ashi, you have 2 patterns, 2 candles. Trend continuation, that's the trend is strong, or balance candle. Balance candle means we are in an accumulation phase. Balance between supply and demand. More buyers or more sellers come into the market. So next point where you can get into your market or in the trend is in the progression phase. If we will reach, we are on track to the last point 2 or to the great big point 2. If you made sure that the big picture has a trend at itself and as well, and you have 2 trends that are running in your direction, this is the best trade you can ever make. Make sure that you go into the trade in the accumulation phase or at latest in the progression phase to make a breakout. Never make trades if the market is in a distribution phase, because after every distribution, after every move, the next correction will come. Every time, believe me, that is a guarantee. All the other things we have to do in trading is based on probabilities. But this is the one and only guarantee. After every move, the next correction will come. Never open your trades in the move, in the distribution phase. Never, 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 guys. Okay, let's see. Putting theory into practice. Do you want to see something? How does the DowHow setup really works? And some examples? Let's do it. Come on. Let's switch to our chart. So you can open whatever you want. Therefore, here in the picture, I have the Admiral Markets chart, and you see, what do you see? A trend. Let me draw it for you. So look at this one. Be a little bit attention, please. Start with trend at the lowest point if you want to see a long trend. Start move, then the correction. So now you see we have a move and we have a correction. Do we have a trend right now? No. For a trend, we need the next move with a close above the last point 2. Do you know why is the doubt here so easy? There is a secret. It's enough. You can count to 3. 1, 2, 3. No more, no less. That's the point. Look at this one. You have to, this is point number 1. This is point number 2. So I don't know, can I make it a little bit, oh, that was too small. And now here is point number 3. Be careful with a question sign. Why? Why is it with a question sign? 1, 2, 3. Question sign. We don't have at that moment a trend continuation. If we have a trend continuation with a close above the last point 2, then you don't have a question sign anymore. So let's see it here. Oh, that was too bad. You know, this is our trend, movement, correction, and you see, after a long correction time, we saw the trend continuation with a close here above the last point 2. So again, number 1, point number 1, number 2. Now we have number 3, and here we have a new point number 2. Therefore, by that reason, doubt here is really easy. It's enough, you can count to 3, 1, 2, 3. Because then you have the next correction, and then you have to look at the next point where you have a close above the last point 2. There is here. So you have to draw this one. So then where is your last correction zone? The last called correction zone is always between the previous point 2 and the last point 3. So this is last point 3. Therefore, your last correction is always placed between the last point 2, previous point 2, and the last valid point 3. This, guys, is really easy. This is the leading trend. Maybe this is the small trend. So, and where is now the accumulation phase? The accumulation phase, guys, is always in the correction zone. That's the accumulation phase. That's the accumulation phase. That's the accumulation phase. You have here the accumulation phase, and here again, and here again. And you could see we didn't have a trend break here right now. And as long as you don't have a trend break with a close, that's the point why is a close so important. The trend is still valid. Trust and believe in your trend. This is one of the easiest setups ever. So, and if you could go into the trend, you open your positions after a balance candle, here, maybe there, or here the balance candle, or here in the accumulation, you see, they occur the balance candles in the accumulation phase. What do you need more for your trading? That, guys, is really, really easy. So this is the leading trend. If you want to see the medium trend, oh, that's really easy. Look at this one. This is the medium trend. Let me draw it for you. It's a short, of course. Start maybe here at the highest point at that moment. Movement, correction, movement, correction. You see that symmetrics. That are symmetrics, the same depth of the correction zone. Now this one, movement, correction, movement, correction, movement, and here we are still in the correction of the medium trend. This is the medium trend. This is the hourly chart. So do we have a big trend? That's all. I guess this was the same one, but maybe I can see the same. Look, I want chart at the highest point. This one. That's the big trend. Movement, correction. Yes. Maybe here this one. Movement, correction, movement, correction. And now you see we have 3 trends. This is a kind of experience, guys. You cannot learn it with one webinar. That's the point. We have a lot of webinars at Admiral Markets, and we want to encourage you in the future. Be careful, coming soon. So this is the hourly chart. So maybe you are a maybe you are a day trader. Let's do it in the 5-minute chart. Let's see it here. Okay, this is the completely history. Okay. You can see the big trend, the really main trends. Let's draw it for you. It's an uptrend. You see? Movement, correction, movement, correction, movement. And you see, do we have a trend break here? Yes, here we have. So you see, where was the best situation coming to the trade? In the accumulation phase. You can see here was the accumulation phase, and you could make a lot of money only with a fixed target, of course, and with the speculation of a trend continuation. This is the big trend. So at the moment, we don't have a new big trend. Do we have a medium trend? Okay, scroll a little bit in. Oh, that's wrong. Scroll a little bit in. And now you can see here is the medium trend. This is the medium trend. So let's see. Start lowest point, movement, correction, movement, correction. Look at this one, accumulation phase, movement, correction, movement. So therefore, there was the last correction zone here, and you could see, okay, there was the trend break. Here was the trend break. Here was the trend over. Okay, that is the medium trend. And now you can see, here we go, where is the small trend? You have to scroll in and maybe start at the highest point again. So movement, correction, movement, correction. So a little bit here, down, movement, correction. No, you see, no close here, no close here. So we have to go up here. That's correction. Now this is one. Okay, this is the small trend. This is the current leading trend. So in that way, and what can you recognize? What can you realize? The best situations ever, guys, ever, is to come into the accumulation phase. So guys, you see, this is the modern age, how you can use the Dow theory in the modern age of trading. Guys, don't forget to enjoy us the next time. At the same time on Friday, our wonderful colleague and friend Jens Klatt will to learn how to master your trading emotions, guys. And I hope you will enjoy this webinar, how to take charge of your cognitive biases to boost your trading performance, the rule of psychology in trading, how to average trader performs on the live markets, how you can profit with this knowledge in your trading. And guys, thank you very much. That's all we have time for today. So that was the wrong one. I want this one. I want to tell you something. No, this one, right. I want to say thank you for your time. Really, really grateful for that. And thanks for joining me on this live webinar. And make sure you tune in on Friday for Jens at 2, the same time like today. And listen to Jens on Friday. And if you are watching later this recording again on YouTube or the first time on YouTube, remember to leave a comment if you want with what you learned in this webinar. And don't forget that you can register for live webinars and the link in the video description here from my colleagues of Admiral Markets. Guys, I want to say thank you, and don't forget you're here at the best webinar series here watching on YouTube. You can see it here in the chart. So where's the next slide? For more analysis and education, go to admiralmarkets.com, guys. Contact us wherever you want. And with that, that's the risk disclaimer. With that, guys, I want to say thank you very much for your lifetime. Enjoy the rest of your day, and we will see each other next week. Bye-bye. Take care and enjoy the rest of your day.